Is the stock market poised to recover at an incredibly fast rate, and maybe the fastest we have ever seen? I'm giving you my thoughts on that, as well as the OPEC deal. Oil production has been slashed to record numbers. I'm going to let you know what things you might want to consider, maybe even staying away from, because I don't think that oil is savable at this point. So I'm going to give you that and more coming up. So there is one analyst out there that thinks the stock market could have its fastest recovery yet. And I'm going to give you some things to chew on, and I thought that he brought up some pretty interesting points to make, as well as we are going to be talking about oil and if it's even savable at this point, which I don't think it is, but I will love to get your guys' thoughts and opinions on that as well once I give you the rundown on what happened with the OPEC deal this past Sunday. But first, I want to welcome you to my channel. Hi, my name is Brad, and this is Own the Chaos. The stock market is crazy and chaotic, so I've made it my mission to help you own it. So if you want to see more content like this and get my thoughts and opinions on how you should be in investing, then please, I would encourage you to subscribe to this channel and hit that notification bell. And if you got value out of today's video, hopefully I earn a sweet thumbs up. Okay, so on to today's topic. So first off, we're going to be talking about Tom Lee. He's an analyst over at Fundstrat Global Advisors, and he's the head of research over there. And he's been very outspoken of the bullishness of the market right now. Currently, the stock market has recovered more than 50% from its recent lows. And what history has told us is that this could indicate a very, very bullish move. So there's a few things that Tom Lee of Fundstrat has asked us to consider when looking at the stock market and seeing if whether or not we've actually reached the bottom here. And so one thing to understand is that the market typically turns well before economic fundamentals do. The S&P 500 50% retracement from its lows was at 2792.69, and it has surpassed 2,800 as of Friday. Now, of course, we always like to say that past history doesn't dictate or produce future results, but it's interesting to note that the speed of the recovery in previous crashes has been rather quick, and then it beats all highs and then continues to climb. Remember, I talked previously on this channel comparing this time in our lives to other recessions and depressions, and the recovery rate was extraordinarily fast. And we also see that it quadrupled from 2008 over that period of time. It's an amazing recovery. So in my opinion, I think there is something to be said for this. Other things to consider that might make the argument for a bullish market, or that we are getting ready to enter back into a bullish market, is that the amount of deaths that we've experienced over this crisis is actually lower than what they were projected. Dr. Fauci has come out and said that, what they were expecting, 100 to 200,000 deaths, has been cut significantly, and it appears as if we are peaking much faster than we predicted we would as well. One other thing that Tom Lee is asking us to consider is that while that we are seeing a huge amount of unemployment claims, that it only accounts for, get this, 0.3% of total personal income. So if you take the entire personal income of the U.S. economy, only 0.3% of that income have filed for unemployment. So it really isn't that significant. As terrible as that sounds, 16 million people who are filing for unemployment only make up for 0.3% of the total income in the entire U.S. It sounds terrible, but really, it kind of isn't. Another great point that Tom Lee has also pointed out is that labor-intensive businesses are easy to restart. Rehiring people can be really fast, and the stock market in previous recessions has always bottomed out before unemployment actually peaks. So what does this actually mean for you as an investor? Well, in my opinion, I think the stocks that are actually getting wrecked are the ones that you should start running towards. Now, I've talked about on this channel about going towards the stocks that are still doing well despite all the issues that we have been facing. Your Costco's, your Walmarts, your Apples, those types of things. And a lot of you have responded and said, yeah, but those are already overpriced for me. And I get that. So, obviously, if you're looking at some of these stocks that have gotten wrecked since this crisis has happened, I would encourage you to obviously hedge your risk depending on what your level of risk is. It might be more advantageous for you to flock or run to the fire on some of these stocks. We've talked about your CCLs, your airliner stocks, but also don't overlook a lot of the hotel and casino type stocks as well. Yes, they may end up coming down even further, but I would imagine they probably don't come down as far as you might think. History has told us that the sharper the decline, the sharper the recovery. And in my opinion, I think that that is exactly what's going on here. Don't be surprised, and I might sound crazy to say this, don't be surprised if by early fall we start to see us climb back towards those previous highs that we were experiencing in late January, early February. But of course, I always want to hear from you. So make sure that you're leaving me some comments down below as I respond to all of the comments, at least as much as I can. You guys have been commenting so much lately that it's been really difficult to keep up with, but I have been doing it. I hope you guys can see that. And I just love engaging with my community. So if you could leave me some comments and your thoughts about what, are you on Tom Lee's side? Are you thinking that, the sky is still falling and we have yet to have seen the worst of the stock market crash? I want to hear from you on either side of this. That way we can engage in a conversation. And, I just love that part of what it is that I do. So next on today's video, we're going to be talking about oil and what the OPEC deal means for anybody who's looking to invest in these oil stocks. But first, I want to invite you to my mentorship. So I have a community that I've started over at WeTradeHQ.com. The links are down in the description below. I'm offering a free month of mentorship right now. And so if you enter the word stocks in the code at checkout, you will get your free 30 days in my daily mentorship where I go live with folks from 9 a.m. to 10 a.m. Eastern time every single day via a video chat. It's on Zoom. And then I'm with folks in a private Discord chat as well. So I'm with you throughout the entire day to answer any questions, whether it's on long-term investing or short-term active day trading. I will be happy to help you with that as well. And again, you get 1 month free by entering the code STOCKS at checkout. All right, so next comes oil. And this is a little bit of a tale of two sides of this coin, right? Well, I just talked about how the stock market could turn bullish, but I'm actually not all that bullish on oil right now. I think in the short term, we might see a small pop in oil, but don't expect that to last. If you're investing in oil right now, especially crude oil, I would suggest maybe trying to scale yourself out. If it were me, looking at a lot of the demand here, and that's the key with oil right now. So let's talk about OPEC and what went down on Sunday's deal and why this should or should not matter to you. So Russia, as well as other nations involved with OPEC, agreed on Sunday to cut oil output by a record amount, representing about 10% of the global supply, agreeing to cut it by 10 million barrels per day. That is an absolutely huge number, which is probably a step in the right direction, but it may not be enough as there is a ridiculously long road ahead. See, before this crisis occurred, oil was already at a low demand, and so they were already suffering before all this happened. And then when everybody was forced inside of their homes, the demand was accelerated exponentially. Since the crisis occurred and the stock market started to drop, global demand decreased by 30% on top of the already low demands going into this. It is predicted that by the 4th of July that all oil storage will be at capacity in the U.S. And so that is going to be catastrophic for the oil industry. Drilling will essentially stop as there won't be anywhere else to store all of this oil. Gas prices could see lows that we haven't seen in the 1990s. Now, this might seem like it's a good thing, but if there's a lot of you that are stuck in your house like I am, you might not even be able to take advantage of these low oil prices to start off with. And there's a reason why the oil is so low, is because the oil economy is so bad. As of this recording, oil is priced at around $23 a barrel, and some estimates are stating oil needs to be in excess of $50 or $55 or more in order for them to just be profitable. Just this past week, Whiting Petroleum filed for bankruptcy, and they were one of the largest producers in oil in the U.S. They traded at $150 in 2015, are now below $1 per share. And remember that $23 a barrel price that I just stated as where oil is right now? That's just to keep them drilling at this point. If it falls below that point, if the price of oil sustains below $23, you're going to see even more shutdowns, and these bankruptcies are going to become more commonplace than one might think. Now, before you start running to this fire and thinking, oh, well, I might as well get some on the cheap, consider this. We still don't know when we're going to be allowed out of our homes. We still don't know when demand is going to come back for oil, as it was already low before going into this crash. And so it really is something to consider possibly staying away from. Now, I'm not saying that you have to, but I don't know if I would be running to the hills and taking out your mortgage just to go buy up some crude oil, because I don't think it's savable at this point. Some people are saying that even if they cut it by 15% versus the 10% that they just agreed on, it still won't be enough to increase the demand to actually bring the price of oil up. But given all that, I would also still love to hear from you on this topic. So if you have an argument that states that you should be bullish on oil, I want to hear from you, because because in my opinion, I just don't see any light at the end of this tunnel. So if you could leave me a comment or two on that, I certainly would appreciate it. And like I say, I always respond to all of them. So please, I would love to hear from you, and maybe some other folks that are watching this video could get some value out of your thoughts as well. But that's going to do it for me, guys. I just want to remind you that if you're interested in checking out my mentorship, please click the links down below and enter the code STOCKS at checkout to get your free month. We're all sitting around not doing anything. You might as well start learning about the stock market and learning about investing to help you build your wealth and have something to do as we're sitting around here and twiddling our thumbs. And again, guys, if you're not subscribed to this channel, I certainly would appreciate it. We've been seeing some amazing growth over the last month or two. You guys have responded so well, and I'm truly blessed to be able to do this every day. So thank you so much. If you want to subscribe to this channel, we have over 12,000 people subscribed already. I would love for us to get to 20,000 before the end of the year. Let's make that happen. So please subscribe to this channel, hit that notification, and if you got value out of today's video, again, I would appreciate that sweet thumbs up. And as always, folks, I will see you all before the bell, and B. Smith is out. Oh, I forgot to do this. We'll just save this for the end. Get out of here. Yes, guys, so again, another great day in the stock market. It's been all over the place, right? Super volatile, a lot of uncertainty regarding the beer bug. We'll just call it that.